Hey traders, Raghee here. Let's do a little follow-up on silver. And this is a trade that we talked about last week, and it was all about waiting for a pullback. We did get a few opportunities to look at different levels of a pullback. The main zone we were looking for on the December silver futures contract was starting at 26.85 and moving that all the way down to 55. All right, so that was the entry zone. And inside that entry zone, what we were looking to do, if you recall, is buy the silver calls. So talked about those October 16 at the money calls, bidding on them as the market moved down into that zone. So silver, December silver futures is the trigger, is the underlying market for the SLV ETF of silver to buy the calls. All right, now a couple things to keep in mind. We've got the entry now. So then we go right back to December silver for our targets. Let's talk about what our upside targets are and what the tools that I'll use to gauge that also are. So what I like to do typically is anchor a few volume weighted average prices. One could be the very first of the month. So let's do this. Let's edit this to look at the first of the month right there. And then I'll also have a rolling 10-day. So I'll actually, that right now would be the first of the month as well. So a little redundant, but the idea is getting above the level, that VWAP level, I think could also be a pretty important catalyst. Let's also talk about the volume profile that's sitting here. This right here. Now, notice this is anchored to the end of August. So basically, this is a volume profile of the month of September. Getting back above that volume profile point of control, which is this white line, again, could be a catalyst. What if we can't? Because clearly we've stopped here a number of times. I would consider that level, this point of control right there, the September volume weighted average price, also to be an optional profit target. Optional, meaning if you want to take something off the table, if you like the momentum that we've seen so far, we can get to that level, which is 27.32, optional. But my first profit target, now first simply means it's non-negotiable. I have to take profit when we get up to 28.17. So these are my two potential upside resistance levels. After that, after I'm able to take either the optional or the first profit target, now remember what we're going to do at that point is move the stock to break even. Break even on an option, in this case the SLV October 16 contract, is going to be whatever I paid for it. That's pretty much break even. I don't want to see the price, the premium value of that option go below whatever I paid for it. Okay, maybe you'll risk a nickel or whatever, but that's it. That's our break even. I don't want to see whatever I paid for that option. I don't want to see that value go below that level. If we can continue higher, which would be terrific, that second profit target should be what I call greedy. All right, we even have a little nickname for it in the room. We'll say we need to shift into greedy bastard mode. And that means I might look for this high to get hit. So now we're talking about way up in here. But once I've moved to a break even, I think the latitude that we now have is to really see how high is high. And one of the mistakes I see a lot of traders make is they flip those two first profit target and second profit target philosophies around. In other words, they'll be very ambitious for the first profit target. They'll let it go way too far, and they'll sit with an unrealized profit for what I believe, it's my opinion, right? Far too long. I've been there. I've done that, where I've had a large unrealized profit where it made sense. We reached certain resistance levels, but I didn't take profit because I wanted more. Well, in this case, what I realized is if I'm trading with a single contract or a smaller position size, I've got to take my profit when I can, not when I have to. As I grow in confidence, as my account size grows, this is something that I learned early on in my career, I can start trading more size and then I can scale in and I can scale out. And that's when the second profit target and the third profit target come into play. So if we have the ability to go to a second profit target, terrific. I'm going to be much more ambitious and look for that 29.90, 29.95, and then I'll move to a trailing stop. So I think a part of trading that oftentimes gets overlooked and we start to get less tactical about it is that profit target. There's a couple other things that I'll do as well. I'll use expected price movement ranges and I'll use historical price movement ranges to help with the targets. That's another thing that I'll do. I'll use these historical volatility ranges. I think using the psychological level of 30, this Darvis level up here, that's another couple of things that I can look at. So if I can focus on volume and volatility and then price levels. So Darvis is a pure price level, V profile, value area high, that's a volume derived level. Major psychological level, that to me is order entry flow. You start to put those things together and where your targets are becomes a whole lot easier to identify. So I hope this helps. I really wanted to follow up on this. I hope some of you got a piece of that trade and let's see what's next. But if you're anxious to take something off the table, think about the optional that I've discussed here today. Move the stop to break even. And then at that point, we can see how high is high. It doesn't mean that you may not get tagged out, but that's not what you're prioritizing, is it? You're prioritizing taking something off the table, moving to break even. If you're comfortable with the value area high, step out in front of 28.17, maybe 28.15. Heck, if you want to, maybe even go with 27.95. That's another level you can look at nearing that value area high. I'll see you in the next update.